It is April 29th. Michael Vaughn with Brian Acker in the office. I haven't been here in more than a year.
Yeah, it is amazing. Yep.
Yeah.
Well, we come down every Tuesday and Thursday, so just to make sure everything's
Well, it is
good to
fine.
go.
I mean, the firm is functioning as well as it could.
I didn't miss a step,
No.
which I'm very proud of our people. But yeah, and even our funds are doing well. So
Well, I got my quarterly report,
for-
and the numbers were terrific. I mean, I'm a conservative value investor, and you're right up there with the index now with your value stocks. Is the rotation on?
Well, the rotation, as everyone knows, we're value managers. So I think what we're seeing is value has had a substantial bump. Now, value stocks have been priced like they're going to go bankrupt. And basically up until maybe August of last year, they were throwing out these names. But, you know, we still had a significant amount of our money, if you will, in technology, et cetera, that we're doing. But, I mean, we're up 8% in the Select U.S. Value 50 Fund, and that's where the index is on a total rate of return.
8% since January?
Since January. And
So is this a signal of inflation?
I think they want inflation, but as I try to explain to certainly a few clients, I mean, we're walking a fine line. On one side, we've got deflation, all-out deflation.
Yeah, we've had for years.
Yeah. But again, I mean, the economic numbers, et cetera, because everyone's self-isolating, et cetera.
Yeah.
I mean, there's a wall of deflation out there, and if the government didn't do what it's already done, and there's probably a lot more coming, basically we would have, it would have been worse than probably the Great Depression of the 1930s. On the other side, you're going to have probably hyperinflation.
Wow.
And that way, we get rid of the debt that all the Western countries are taking on, and
Inflated away.
Inflated away.
Always do.
And so again, you know, inflation can run, let's say, 6-7%,
Easily.
and we'll cap yields, let's say, at 2%. And
Who caps yields?
the Bank of Canada, all the banks, oh yeah, they'll cap them maybe at 2%, maybe less. And that way, and it's
Is it
called,
like wage and price controls in the Trudeau years?
yeah, I mean, let's talk about Toronto real estate. Why is it going ballistic? Well, I can tell you why, is because the Bank of Canada is literally, they were buying $4 billion of fixed income a week.
Yeah.
They reduced it down now to $3 billion, but they now own over half our Canadian bond market. And so they're buying up everything that they can asset-wise because they don't want prices to fall, right? So again, but if they are successful, we're going to have a lot of inflation. And the companies that we have in particular that are value names can pass those increases on to the consumer. That's the most important part. There's going to be companies that can pass those increases on and can't. And so I think the market will differentiate those companies in the future.
Okay, we're walking this tightrope.
We are.
When do we get a signal which side we're going to fall off?
I wake up every day and go, okay, where's that signal? So again, it's all in the Fed speak, but if I went back to 1994, it was the first week of February of 1994. It was a Friday, as a matter of fact. We had one number, we had an employment number that was so whack. It was so big when we came out of the recession, the early 90s recession. And I can tell you from that Friday to when there was a congressional election that year in 1994, and actually the Republicans took over the House from Bill Clinton. Bill Clinton was president then, etc. But I'll tell you, every day prices and bonds went down and yields went up. So I think it even capped out at about 8.2%. I think that was the cap on the 10-year U.S. Treasury yield back in 1994. So again, the government wants to control those prices, and I think like Japan has done, they basically control the bond market.
Yeah.
They'll tell you where yields are going to go in the future and not the economics. So.
Well, it's good to see you back in the South. I know you have been at home,
Yeah.
but good to see you here.
Oh, yeah, for sure.
2 days a week, and
Yeah.
hope to see you again soon. Thanks for the update.
Michael, always a pleasure, and thank you very much.